Robert Millner is an Australian investing legend and the non-executive chair of Washington H. Pattinson and Company, Australia's second oldest publicly listed corporation. Since the company listed, the company's share price has risen more than 1,100% in line with its mission to create capital growth and regular dividends through a diversified portfolio of listed equities, private markets, credit and property assets across multiple industries. Robert Millner joins me on the Stock Network to discuss his key lessons for investing and what individuals can learn from Pat's proven approach. Robert, welcome.
Nice to be here.
Wonderful. Now, Robert, old or young, when we approach investing, what do you believe are the key skills that are required to be a successful investor?
I don't want to sound too simple, but most important, I found over my long period of time, is people. Unless you have good people, it's very difficult. Common sense is very important, and I think you've got to be patient. And we've always learned, both Pattinson and at the family level, it's always a very good idea to have cash. Because I'll give you an example. When we had the GFC, for example, I can remember buying Commonwealth Bank at $27. I think yesterday or the day before they got to a record of $120. And in that period of time, we've got more than $27 worth of dividends out of Commonwealth Bank. So I think if you're patient, you've obviously got to do a lot of reading, do your due diligence. And another interesting story your viewers might be interested in. When I first joined the board at Washington H. Pattinson in 1984, a chap called Hugh Dixon was a very astute investor. And one of the things he told me that he had always been told, that he used to invest in things like, in those days, Colgate, Gillette, the razor blades, etc., things that people use in their life. And now when you look at some of the big stocks in the world, you've got Apple. Most people have got an Apple phone or Apple computer, Microsoft. So, the wheel's still turning. So if you invest in things that people need, you'll probably never go wrong.
There's some terrific insights. Now, while you're known as a successful investor, your own career has extended across farming, a stint in the family business, and board positions on major ASX listed companies. What business-specific lessons have you learned from each of these stages of your very diverse working life?
Well, obviously, again, I mentioned people as an investment house. We haven't got the people here. If something goes wrong at Brickworks or something goes wrong at New Hope or something goes wrong at TPG, for example, we've always backed good people. And as we spoke before we came on the air, Lindsay Partridge had been managing director at Brickworks for 25 years. Now she's retirement. So we've always had good, long-serving people. And I've been very lucky and fortunate to be involved with those people. And I've learned a lot from those people, as well as we've been going through the various cycles we've been through.
And Robert, in your experience, where do you see people get the most stuck when it comes to investing? At what part of the process really do you think is the most challenging, and how do you personally confront it?
Well, we've been through a lot of different cycles. Fads, maybe is a word we could use. We had the tech boom, those sorts of things. And I think it's very important, again, people need to do their own reading or their own due diligence. And don't get caught up in all these fads. A lot of people got burnt, for example, in the tech boom. But and I feel for smaller investors, it's very difficult to get information. If people are able to go through one of the broking firms, you can get research. Otherwise, you're fairly limited in where you can research. You can go into the company's websites and look at what they actually do and how they perform. But it's nice to get somebody's outside opinion, an analyst's review of the company, to just tell you where they're going and what they do, for example.
Absolutely. Research is a key attribute that you mentioned there. Now, Pat's obviously has an edge when it comes to research, and you've got a proud, ultra long track record of outperforming key benchmark indexes. How has the company continued to deliver these results despite broader financial markets being really quite notoriously volatile?
I think we've been very disciplined. We've been very patient. We've been around a long time. This company has paid a dividend every year since 1903. We've never missed paying a dividend, and that goes through the war years, the depression years. More recent, a lot of people remember the GFC and COVID, and we're probably the only company in the last 25 years that's been able to increase our dividend each half. So we've been patient and disciplined, as I said, and again, we've always had cash that we can move on. We're sitting in a position at the moment, there's quite a bit of uncertainty what's happening in the world. We're sitting on quite a bit of cash, so if something does happen, we're able to move very quickly.
And well, as they say, cash is king. When it comes to individual investors, what do you think they can learn about your approach when it comes to their own investment journeys, apart from holding on to some cash?
Again, I think the most important thing is you've got to be patient. And as I said, if you buy a Commonwealth Bank or a BHP, and we're very fortunate here that in the Keating and Hawke era, they brought in what's called dividend imputation, where the company pays the tax for you, so you get franked dividends, and that's tax-free in the hands of individual investors, and you're getting sometimes 6 or 7% fully franked. And that compounds over a long period of time. So as I said, if people were fortunate enough to ever buy those Commonwealth Bank shares, even when they listed, I think they were $5.40 when they listed way back in the 80s. And as I said, now they're $120. CSL is another example of a company that floated. I think they floated for even less, at $3.70 or something. They've split their shares, and their shares are now close to $300. So in real terms, if you bought those shares in the initial float, $3.70 is probably about $600. So people have done very well if you be patient. And you've got to remember, every time you go and sell something, you've got to pay capital gains tax. So then you've got to find something that's going to compound you a better return than what you've sold your, say, your CSL for, that you've paid 30% capital gains tax on. So when you work it out, you've got to get a better compound return than what you're getting out of CSL. Because the share market, it goes up and down in cycles. You know, we've all been through that. And again, we want to talk about cash. When you have a downturn in a cycle, that's when investors can buy something, and you reap the benefits when it gets to the top.
And Robert, speaking of those cycles, the ASX is now at record highs. What key trends or sectors are you particularly bullish on now, and perhaps what is keeping you up at night as well?
We're not concerned, but we're wary that could unfold around the world. We've got what's happening in Ukraine, what's happening in Israel, for example. Inflation's still quite high. Interest rates are still quite high. So there's a lot of uncertainty out there. We're patient investors if something does happen, and we have done some very good investing actually in the last 6 or 8 months. We bought some next gen shares, which are uranium shares, and I think we've already made 3 times our money on those. So I'm very bullish on commodities. I'm concerned about the country going forward. We are troubled here by getting approvals. The time it takes to get an approval for a house is sometimes 10 or 12 months now to get a building approval. Mining, it's very difficult to get approvals and go and operate a new mine. And if you get an approval today, it's going to take you 5 or 7 years before that mine is operating. So if we're going to shut down all the gas, coal and petroleum products, I don't know where we're going to get our lithium and copper and nickel from for the next cycle if we're not allowed to develop new mines.
Yes, that certainly is a whole range of issues there, and that red tape, you wouldn't be alone in saying that there should be less of it. But overall, Robert, I must thank you for your insights today. So much great advice, and clearly it's on the foundations of the incredible success that you have had. So thank you very much.
Well, I hope if you get some small investors come on board after this, that they're very patient and they do very well out of their investments.